Hello, this is Pioneer News. I'm your host, Hunter DeYoung. I'm going to send it over to Carissa now.
Some of the largest companies involved in the demand of crude oil include Saudi Aramco, Rosneft, KPC, NIOC, and CNPC. Saudi Aramco produces over 10 million barrels of oil per day. This company has the world's second largest proven crude oil reserves with 261.5 billion barrels of oil equivalent, which accounts for about 10% of the world's crude oil supply. Rosneft produces over 4.2 million barrels of oil per day. They are the third largest company in Russia and account for over 40% of Russia's crude and condensate production. KPC produces over 3.4 million barrels of oil per day and produces roughly 7% of the world's total crude oil. NIOC produces over 3.2 million barrels of oil per day, and CNPC produces 3 million barrels of oil per day. The countries that export the most crude oil include Saudi Arabia, Russia, Iraq, Canada, and the United Arab Emirates. Saudi Arabia is the world's #1 oil exporter. In 2018, they were responsible for 16.1% of global oil exports, totaling in $182.5 billion in value. Russia is accountable for 11.4% of global exports, exceeding the value of $129 billion. Iraq exported $91.7 billion worth of the commodity, which accounts for 8.7% of global exports. Canada exported $66.9 billion worth of the commodity. UAE exported 5.2% of the world's total oil exports. The countries that imported the most crude oil include China, the United States, India, Japan, and South Korea. China imports 202.2% of total crude oil imports, totaling in $239.3 billion. The United States imports 13.8%, totaling in $163.1 billion. India imports 9.7%, totaling in $114.5 billion. Japan imports 6.8%, totaling in $80.6 billion. And lastly, South Korea imports 6.8%, totaling in $80.4 billion.
Dun, 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 dun.
Today I'll be talking about crude oil predictions. Crude oil averaged $63 per barrel in September, while falling to $58 per barrel as of October 4th. The U.S. Energy Information Administration predicts the prices will average $59 per barrel in the fourth quarter of 2019, and then fall to $57 a barrel by the second quarter of 2020, which is $5 a barrel lower than what was projected last month. A projected decline in price per barrel is expected during the first half of 2020 as the global inventories rise. An expected increase to an average of $62 per barrel is projected to occur in the second half of 2020 as demand meets the supply available. The current state of conflicts occurring within the oil industry, as well as the unpredictability of demand and economic growth, has led to a lower short-term price projection by the U.S. Energy Information Administration. Due to all these factors, crude oil is not recommended as an investment for a short-term gain due to diminished possible gains. Regarding long-term projections, OPEC's monthly oil market reports states that the world oil demand will increase by 1.3 million barrels per day in 2019. The World Bank forecasts that crude oil will reach $70 per barrel by 2030 as the world's oil producers reduce supply and production in order to maintain a price equilibrium. Crude oil has become a need more than a want in modern society, as well as the economy. These needs are reduced by the want for lower carbon emissions and advancements in green energy. As electric vehicles are transforming from a niche market to a mainstream availability, it further reduces the need for oil. Considering the volatility of the global oil industry and current decline in economic markets, crude oil could soon be bought at some of the lowest price levels it has reached in several years. Crude oil future trade in units of 1,000 barrels, so crude oil futures trade in units of 1,000 barrels, so this is no small investment. Investing in an established company that profits from changing crude oil prices is largely projected to get a positive long-term return. With great risk often comes great reward. Back to you, Hunter.
Hello, I'm Hunter, and this is your weather in Alfred, it's currently snowing. It's snowing, right, Emmett?
Yeah, it's snowing in Alfred.
Check the window.
Yeah, you got some flurries out there.
Alright, yeah. So it's snowing in Alfred right now, okay? Looks like it's lightening up down in Wellsville, and over in Belfast it's snowing just like it is here in Alfred. So here at Alfred Weather, we tell you what you can see. It's bill from April 2010. Steven, throw my pictures on my slide again. So the immediate effects. So 11 people were killed during the explosion. It took about 3 months to stop the oil leak, but at that point, about 4 million barrels had leaked into the Gulf. It took 47,000 crew or people to clean up all the oil, and I mean, they still didn't get out of the water, but so that means there's permanent damage to the ecosystems there. It cost $65 billion to clean up for BP, and that's just scratching the surface. They haven't cleaned it all up yet. So some of the legal and economic changes that occurred, the legal implications were that they had to put these blowout preventers in. So that was the issue, was they had a blowout, and they had no way to contain it. So these blowout preventers go around the oil source, and when they leak, they contain it, and go in and fix it before they leak 4 million barrels into the Gulf. So that's something that was implemented that oil companies had to start using. The Obama administration really hampered off-well rigging. They saw it as an environmental hazard, so they really slowed that down. Then in 2018, the Trump administration revamped it, boost the economy. So, but the immediate economic effects were, you can see in this graph here, BP stock's going well. It's going well at about $60 a share. In April, when it happened, stocks dropped off and about 50% of the original value. So the yeah. Thank you for watching Pioneer News, where we almost get it right. So we're done, right?
Yep.
Hello? Guys, we forgot the history bit. Alright. In the later half of 2014 and early 2015, the prices of crude oil fell from over $92 to almost half of that. They rose again, but only to about $66 before continuing to fall until early 2016, where prices bottomed out at just under $29. I'll get paid for this. Prices went on to rise again after this, and by June had rocketed to over $50, after which they rose and fell regularly over the next 5 months until December, when it spiked again to almost $57. Prices almost leveled out in early 2017 at about $55, before falling from March until June, getting as low as $45, and then going on the rise for the rest of the year to just about $67 by the end of December. By the end of January in 2018, prices had risen even higher to a little over $70, before falling to $62 in the beginning of February, and steadily rising through May to more than $78, and by October had reached a staggering $84 per barrel, before falling to a little above $53 by the end of December. Is there really nobody left in here? Jeez. So far, in 2019, prices have risen from January through May to above $72, and then from there have dropped back down to $58 as of early October. Alright, guess I'm gonna have to close up then.